Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room here, streaming live in YouTube. We have some very strong economic data that came out this morning regarding the CPI. It's the highest that we have seen in 30 years. It's over 6%. The data basically for jobless claims as well is running very hot. So let's take a look at the data here for a minute, and then we can analyze how we're trading the markets and what's happening to the gold market here for a minute. U.S. consumer surge, weekly jobless claims fall. U.S. consumer prices increased more than the expected October as the cost of gasoline and food surged, leading to the biggest annual gain since 1980. Further signs that inflation could remain uncomfortably high well into next year amid snarled global supply chains. The consumer price index rose 0.9% last month after gaining 0.4% in September. The Labor Department said on Wednesday, in the 12-month through October, the CPI accelerated 6.2%. I think we want to take a look at this number, which is much higher than expected. The consumer price index rose 0.9% last month after gaining 0.0% in September. The Labor Department said on Wednesday, in the 12-month through October, the CPI accelerated 6.2%. That was the largest year-on-year advance since November 1980 and followed a 5.4% jump in September. Excluding volatile food and energy components, the CPI gained 0.6% after climbing 0.2% in September. The so-called core CPI jumped for 4.6% on a year-on-year basis. This is the largest increase since August 1981, after being steady at 4% for 2 straight months. Economists polled by Reuters had forecast the overall CPI shooting up 0.6% and the core CPI rising 0.4%. I want to point out to the key, I think the key factor in here, which is making a difference with the real inflation, where when they say excluding the volatile food and energy components. Okay. The commodities markets, the food market has almost doubled in price and headed higher. We have energy prices at almost 85 going to $100 a barrel. And if you include these components in the as the old formula did back in 1970s, 1980s, we're looking at inflation, according to shadowstats.com, exceeding 13%, which is an astronomical number that we're looking at. We're back in the 70s again, is what I'm questioning myself. And interest rates are at negative rates with a world debt close to $30 trillion. So we're looking at finally the gold market, the metals markets reacting to this compressed and, I believe, manipulated price of precious metals. Gold is up 170%, 1.7%. Silver is up 3.44%. Copper up 0.46%. We have GDLC, we have the digital assets reverting up 2%, GBTC up 2%, 2.4%. Bitcoin has reversed, up about 1.5%. The gold mining shares are up substantially higher here. We have GDX, which is really strange. We're at a plus, and now we're looking at a negative. So this is the anomaly that we continue to see in precious metals, that the market is reacting on its own internal technicals. The initial impact is bullish here, and so we recommended, obviously we covered some hedges here, and it's going to get a volatile market from here on as gold broke above the 1850 level. And breaking the 1850 level is a breakout in gold. So any previous thought of any major corrections in the gold market here, I believe, is going to be put behind us, because as we get this inflation really on fire here, it's igniting the compressed price level in the gold market and igniting the momentum that has been compressed since last year after the high was made of 2089. And breaking above 1840 is breaking above the annual average price. $18.40 is the annual average price, and what you see here is the market breaking out above the monthly of 1852. 1819 is where we took some profits in 1852, completed the monthly targets, as you can see on the left of the chart. And we are breaking out. We are breaking out. This level here is breaking out of the annual 1840 average, and we have completed this target, the weekly, monthly target, and the breakout that we have here is pointing out basically to these levels above. And we're looking at 2002. (2003) is the annual target that has been activated by this breakout that we have annually here. So anything previous to this is negated. When we have the annual momentum, we have the monthly momentum, we have the daily and the weekly momentum. It is a confirmation of a breakout, and we've been writing about this in the Associated Press. We've been recommending to our traders that if we do get a breakout through this level of resistance, and when you get to these levels here, this is the algorithm telling us that this level is basically where you can expect a lot of supply to come into the market. And when we take a look at the volatility short term, you can see we've gotten some false bearish triggers, but it has basically identified for us where we want to buy the market. Even when it came down to 1758, we came down below the weekly buy one level, and it came into an area of support, and we've been recommending to buy long. And as we got up into this red level here, it represents basically a distribution of supply. What we have seen here, ladies and gentlemen, for those self-directed traders, is a confirmation that buyers are taking over any supply that is being offered. Breaking through this resistance, taking the supply, completing the target of 1841, completing the target of 1861, neutralizing the daily signal by a close above 1844, completing the weekly signals of 1861. A close above 1861 is going to negate the weekly targets now, and obviously we move into the monthly, which is activating the 2003 target. This is pretty exciting because we've been waiting for this move, and it appears that the price cannot be suppressed anymore. They will try, short sellers will try, anybody that's been short, particularly the central banks, will try to scare or spoof the market. But I believe when you take a look at this inflation levels, when you really take a look at where we are in a far worse situation than the 1970s inflation rate. And are we going to see interest rates shoot up aggressively on the face of a close to $30 trillion debt level? I don't think so. In the 70s, we had billions of dollars. So I think it was about $800 billion in debt. We are in a $30 trillion debt level. And I don't think you got to be a rocket scientist to do the math. If we just go back to a normal average interest rate of 5%, you're looking at a major, major collapse, not only in the stock markets around the world, but the economy as a whole. We're in a inflationary environment that our leaders keep telling us that it is transitory. Their own numbers are showing the worst inflation rate in 30 years, 6.2%. without including energy and commodities. We have energy prices almost reaching $100 a barrel here, right around the corner as we come into the wintertime. I believe that we are moving closer to a serious adjustment to the mean in precious metals, in gold and silver, in gold mining shares. And I think this is just the beginning. Let's watch the market here for a bit, and I will continue to post you. Silver has completed the weekly targets of 2506. What I want to do is I want to share the AI produced by Nikki the Robot for the gold market as we take a look at the weekly signals.
Hello everyone, this is Equity Management Academy with a weekly gold report for November 5th, 2021. Summary. The weekly trend momentum at 1775 is bullish. The weekly VCPMI at 1800 is bullish price momentum. A close below 1800 stop negates this bullishness neutral. If long, take profits 1841 to 1861. Trading instructions. Weekly trend momentum, 1775, bullish. The gold futures contract closed at 1817. The market closing above the 9-day SMA 1775 is confirmation that the weekly trend momentum is bullish. A close below the 9 SMA would negate the weekly bullish short-term trend to neutral. Strategy. We are coming in with a weekly bullish sentiment unless it closes above 1775. Weekly price momentum, 1800, bullish. With the market closing above the VC weekly price momentum indicator, 1800, is confirmation that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish trend to neutral. Strategy. We are coming in this week with a bullish price momentum unless it closes above 1800. Targets are 1841 to 1861. Weekly price indicator. Exit, longs. Sell 1, 1841. Sell 2, 1861. Exit, shorts. Buy 1, 1779. Buy 2, 1734. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1779 to 1734 and go long on a weekly reversal stop. If long, use the 1734 level as a stop close only and good till canceled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1841 to 1861 during the week. Strategy. Bearish targets are 1767 to 1750 to cover shorts and look for support. Look for reversions from here to unfold back to the mean. A close above 1790 activates the 1808 to 1830 levels of resistance and targets.
These targets have been completed today. And this report was published on Saturday. Now, again, when we complete the targets above the sell 2 level, the program goes neutral. Then it looks at the weekly. And if the weekly closes above the sell 2 level, it goes neutral. And then we take a look at the bigger scale, the bigger numbers that are the monthly numbers. And we see that the sell 2 level and the monthly number also has been completed. Therefore, the daily, weekly, and monthly programs have gone neutral, completed the targets, and now we're looking at the daily, at the annual levels of 2003. We have entered a new shift in the price level in gold. And I believe, just like everything else is beginning to adjust to this inflation level, we're looking at gold and silver doing the same thing. The difference here is that we've been waiting for this reversion to unfold here for more than a year. And so we have the confirmation here today. The market is in an annual bullish price momentum with a target of 2003. Let's take a look at silver.
Hi
here.
everyone, this is Equity Management Academy with the weekly silver report for November 5th, 2021. Summary. The weekly trend momentum of 23.31 is bullish. The weekly VC PMI of 23.85 is bullish price momentum. If long, take profits 24.65 to 25.06.
Trading instructions.
Weekly trend momentum, 23.31, bullish. The silver futures contract closed at 24.16. The market closed above the 9 SMA 23.31 is confirmation that the weekly trend momentum is bullish. A close below the 9 SMA would negate the weekly bullish short-term trend to neutral. Strategy. We are coming in this week with a bullish sentiment unless we close above 23.31. Weekly price momentum, 23.85, bullish. With the market closing above the VC weekly price momentum indicator of 23.85, it confirms that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish signal to neutral. Strategy. The VC PMI is bullish price momentum unless it closes below 23.85. Take profits 24.64 to 25.06. Weekly price indicator. Exit. Longs, sell 1, 24.65. Sell 2, 25.06. Exit. Shorts, buy 1, 23.44. Buy 2, 22.64. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 23.55 to 23.13, and go long on a weekly reversal stop. If long, use the 23.13 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the 24.54 to 25.11 levels during the week. Strategy. If long, take profits 24.65 to 25.06. Use close below 23.85 stop as protection. Hi everyone, this is Equity Management Academy with the weekly Bitcoin report for November 5th, 2021. Summary. The weekly trend momentum of 61,541 is bearish. The weekly VC PMI of 61,813 is bullish price momentum. A close below 61,813 stop negates this bullishness neutral. If short, take profits 58,962 to 56,848. If long, take profits 63,927 to 66,778.
Trading instructions.
Weekly trend momentum 61,541 bearish. The contract closed at 60,965. The market closing below the 9 WSMA 61,541 is confirmation that the trend is bearish. A close above the 9 WSMA would negate the weekly bearish short-term trend to neutral. Strategy. We are coming in this week with a bearish sentiment unless it closes above 61,541. Weekly price momentum 61,813 bullish. With the market closing above the VC weekly price momentum indicator of 61,813, it confirms that the price momentum is bullish. A close below the VC weekly, it would negate the bullish signal to neutral. Strategy. We are coming in this week with a bullish price momentum unless it closes above 61,813. Targets are 65,265 to 67,745. Use close below 61,813 stop as protective level. Weekly price indicator. Exit. Longs, sell 1, 63,927. Sell 2, 66,778. Exit. Shorts, buy 1, 58,962. Buy 2, 56,848. Cover short on corrections at the 58,962 to 56,848 levels, and go long on a weekly reversal stop. If long, use the 58,962 level as a stop close only, and good till cancelled order. Look to take some profits on longs, as we reach the 63,927 to 66,778 levels during the week. Strategy. If you are long, take profits 63,927 to 66,778 levels of resistance. Use close below 58,962 as protective stop.
We have accomplished the targets for Bitcoin as well. We have pretty much accomplished the weekly, and we're moving into the higher fractals here in price at 69,180, which was accomplished here for today. And the next target is 70,335. So we are approaching areas that indicate a lot of supply, but as long as the market momentum, more buyers that are willing to take the risk of all this supply up here by buying up here at these levels are going to take the risk. And if there is enough more buyers, I would say, than sellers here, we're going to be looking at a market breakout to the upside. So just to review here, we got a breakout going on, it seems, on gold and silver. Continue to hold your long position. The annual target now we're looking at is 2,000 and change. And in the silver market here, we have approached targets, completed targets once again, breaking out above the weekly, neutralizing daily, weekly, and we're on the bigger patterns here towards $27 in the silver market, unless the market comes down and reverts back to the mean. I want to thank everybody for once again the opportunity to share this information with you. And until next time, my friends, you take care. I'll see you next time. Be well, be safe.